Hello, my name is Russell Myers. Welcome to Issues Unite. So, stock market yesterday. The stock market in the past month has taken a decline of 5,700 points. Yeah, 5,700 points. Now, I had written an article a couple of weeks ago saying that if the market reached a decline of roughly 4,000 points, that panic would set in. Basically, I was correct because up until yesterday, up until Friday, the market in the past month had declined by 3,700 points. Now, people tend to round off numbers a lot. They used to have this thing, this belief that women rounded down and men round up. This is why in grocery stores, you tend to have prices like $1.99. The belief was that if a woman looked at this price and that a woman would see $1 and a man would see $2. Well, since women did most of the shopping, they use this system of pricing things at like $1.79, $1.99, what have you. But I don't know if there was ever any study done that proved this to be true, but they used it anyway. And most of the people I know today, male or female, round up. So when people saw a 3,700 point decline, they saw a 4,000 point decline. And in addition, just the reports of one decline after another, day after day, people started checking, whether large investors or small, started checking their accounts and became fearful of losing what they had put into the market. So they started pulling money out before the market completely collapsed. I'm not expecting this to change very much. So here are some numbers. Pardon me. Let's see. All right. So in the past month, 5,700 points. The highest during that time was 29,551 on February 12th. And then hit the lowest yesterday at 23851. So that's a 5,700 point decline. So yesterday, that was in one day, more than a 2,000 point decline. And that's on top of the fact that between Thursday and Friday last week, the total decline for 2 days was over 1,200 points. So this sudden decline yesterday sparked a suspension of trading for 15 minutes early in the day, when in the first hour or so of trading, the decline was over 1,500 points, and they have 3 triggers for the stock market that will suspend trading. The first trigger is when the market loses 7%. So that first trigger was hit, and they suspend trading for 15 minutes. The second trigger is if the market declines by 13% for the day from opening, and they suspend trading again for 15 minutes. The third trigger is if the market loses 20% from opening to any point during the day, except for the last 35 minutes of trading, anytime before the last 35 minutes of trading, if they lose 20%, then then they stop trading for the entire day. Doesn't matter if that 20% is hit half an hour into the day, no more trading for that day. So, when people talk about a stock market crash, we're not going to see anything like what happened in 1929. Because these triggers have now been built into the New York Stock Exchange to prevent that from happening. But over a period of days, you can lose 20% today and 20% tomorrow and 20% the next day. Now, technically, the stock market can never lose 100%. It just won't happen. But if you hit a 40%, 50% drop in the market, then, that is a catastrophic failure of the system. That is just devastating to the entire economy. So, like I said, people already hit the panic point. That button was pushed. You're not coming back from it. Not in any short period of time. I'm not expecting the market to do much better in near subsequent days. I expect it to continue declining. Now, right now, today, it's up by 693. So it may go up a little bit today, but by end of day, I'm not expecting a climb by over 1,000% or anything like that. And then tomorrow, I expect it to decline again. Today is going to be a really volatile day. There's not much that is going to avert this decline from happening and maybe accelerating. The Federal Reserve cannot do very much besides another emergency reduction of the core interest rate, which they may have already announced and I haven't heard about it yet. And that might be why we got a 700-point climb. But we're so close to a 0% interest rate that even that is not going to do much good. If banks, companies and banks have exhausted their liquidity, then even a 0% loan represents a loan. It is a debt. If they can't afford to pay the debt, if they can't afford the payments on that loan because the rest of the economy is receding, then they can't project out and say that if they take on more debt, that they'll be able to pay it at all. The only other thing the Fed can do is begin buying corporate stocks directly. But the amount required to offset this kind of decline would cause a devastating decline in the value of the dollar, and it's just not viable. A 4,000 point, well, actually, we reached, with a 5,700 point decline in the market, you're talking trillions of dollars gone from the stock market. Congress could implement some kind of legislation that would have the same results. They can't bail out the market. So the only other option would be literally legislating the banning of stock. Or banning the sale of stock by a percentage or anything. But that would remove all claims of capitalism and free markets. Not to say they won't do it. That's entirely a possibility. But no matter what, this decline is way different from 2008 because this meltdown is diverse. It's spread out across the market. You cannot, it's not focused on a certain industry or one or two industries. Like in 2008, they could focus on the housing and the auto market. This time you can't do that because it's hitting all industries all at once. No matter what steps are attempted, the thing to keep in mind is that these steps are going to be focused on bailing out the stock market, the rich. It's not going to focus on consumers. It will just involve further escalation of the national debt to save the people that have caused this crash. So, what I'm expecting to be happening next is going to be announcements of bankruptcies at different levels and layoffs. I mean, Airbus is already going to lay off 1,200 people. Nationwide Insurance has announced 500 layoffs. We don't know what else is going to happen from here as yet. Until these announcements start coming out, I'm not going to venture a guess as to who, what industries, what have you. But if you're looking for the stock market to make some miraculous recovery in 1 or 2 days, or even a week or a month, I'm not seeing it happening. The supply chain is still disrupted, and I mean, even gold and silver showed a pretty significant decline yesterday, and gold had been climbing. Silver was pretty stable. So that means that people are liquidating assets. They're not comfortable at all. And, they're liquidating because they just don't have the cash to move forward at this point. A lot of people that are invested in the stock market, pardon me, are also people that have invested in gold, and if they lose the cash in the stock market, well, they still have to have money to function with. So they're selling off gold, and that's when the stock market and precious metals are all moving down. And I haven't checked the crypto market, but I'm guessing that has also taken a hit within the last 24 hours or so. When they're all moving down together, you've got a big problem. Yeah, so let's wait and see what comes here. Seriously, I'd move money into bonds, very stable bonds, or again, buy into precious metals right now. You might see a dip. If you buy today, you might see a dip, but it's not going to be long before that's going to come back up, and probably more than ever. That's my own opinion. I am not a financial advisor. That's just my thoughts on the matter. Okay, so I'm not a professional at this. I just make observations, but most of my observations do come out being pretty accurate. Maybe not with the timeline, but sooner or later, they come out pretty correct. Anyway, that's it for today. I hope you all have a good day. And I'm going to go run off and do something. I don't know what yet. Bye.